It is more than just a cash flow forecast and financial projections. As a very simple definition, revenue growth is the amount of money your company makes over a predetermined time. This is then compared to the previous identical amount of time. So, in this simple example, it's exactly how much money you made this month compared to last month. We need to clear up another misunderstanding of this definition as well. The term revenue is very often confused with sales and earnings. We should take a quick moment to look at the differences. Revenue is the amount of money made from all sources in your business. This includes sales, investments, royalties, fees, and more. It is also important to be aware that expenses aren't considered when talking about strict revenue. Sales is to be considered the amount of money made from selling the products and/or services your business offers. Sales also does not factor in expenses either, just like the term revenue. Earnings is when you deduct expenses from the total revenue. Another big difference between sales, earnings, and revenue is that sales and earnings both tend to be goal-oriented. This is in contrast to revenue growth, which should be considered a strategy as opposed to an end goal. Having a detailed plan for increasing revenue over both the short and long term can be considered a revenue growth strategy. Every company has different needs, so each revenue growth strategy will be different. There is absolutely no one-size-fits-all strategy here. A good revenue growth strategy will involve ensuring your marketing, sales, and customer experience teams are aligned, communicating, and working cohesively. One efficient way to address this is to ensure your employees are generally satisfied in their jobs, more on that in just a bit, and involve them in your planning process to an extent. This helps keep communication lines good and can give you more valuable input from different perspectives. An oversimplified aspect of revenue growth is that it allows you to have a bigger picture of what's working, what isn't, and much more importantly, how to fix things that are not working. A revenue growth formula should guide strategies in several areas, including customer acquisition, retention, and success, human resources, marketing, pricing, professional development, sales. If your revenue isn't showing the success you expected, you can more easily review the results of each area's strategies to determine and address pain points. Most business owners find it more tempting to look at total earnings growth as opposed to revenue growth. However, it needs to be said that while you should indeed look at both, you should generally evaluate your revenue growth first and foremost. This is because, as we discussed earlier, earnings are revenue minus costs. Now, it is true that you can marginally improve your overall earnings by cutting costs here and there, but without growing more revenue, that simply is not a permanent solution you should focus on. To sum things up, focusing on revenue growth is much more beneficial because it encompasses a bit of everything, as well as determining the overall health and direction of your business. It allows you to locate inefficiencies, fix them, and continue to steadily grow your company's earnings a bit more smoothly. Let's take this all the way back to math class and use a word problem. In January 2021, the ABC company made $100,000. In December 2020, they made $96,000. Using the revenue formula, determine their revenue growth rate from December to January. If that made your eyes glaze over, that's okay. I will give you a cheat sheet to use. The revenue growth formula is as follows. Current period revenue minus previous period revenue divided by previous period revenue. This works out to be the difference between the current period revenue and the previous period revenue divided by the previous period revenue. It sounds complicated, but once you have used the formula once or twice, it doesn't seem so intimidating anymore. For our fictional ABC company example, it breaks down like this. January 2021 revenue minus December 2020 revenue divided by December 2020 revenue. That seems a little easier to comprehend already now, doesn't it? Numerically, this becomes $100,000 minus $96,000 divided by $96,000. Still with me so far? This leads to $4,000 divided by $96,000 equals 0.0417, rounded up. Because revenue growth is usually referred to as a percentage, we can say the ABC company's growth between December and January was approximately 4.17%. In other words, it can take years to reach relatively consistent revenue growth. So, continue to monitor your revenue growth, create new strategies, and always be willing to learn so your business can thrive. That's the big picture. Revenue generally fluctuates every month, quarter, or year, no matter where you are in your business life cycle. Instead of viewing the dips as negatives, view them as opportunities. How can you strategize to increase your revenue growth? Keeping an eye on your revenue growth can keep everyone employed, customers and investors happy, and your business growing even with short-term dips. This is why revenue is a strategy and not a goal. You can't necessarily control the market, but you can control your response to it, and that response is your revenue growth strategy. Betting an all-in-one revenue growth consultant to partner with can ease your mind, take some things off your plate, and help streamline your own strategies. When considering the possibility of working with a revenue growth consultant, you should first consider the following: your profit goals, the support you need, necessary features, integration capabilities, trustworthiness. These are just a few things to be aware of when considering revenue growth. Hopefully you found these helpful. If you would like to learn even more about how you can streamline the efficiency of your business finances, then you are more than welcome to contact us, and we will take a look at your unique situation and offer some sensible solutions that would work best for you.